We're on. I think as soon as it says meeting is now streaming live on Facebook,
We
it's on.
We are on.
So what's the SAS meter for today? Did you just say, Beth? I think everybody should know that.
The sesometer, the sasometer. I think we can do 7.
7 for the SAS meter. This is good. Okay. Can I please share it to my company page before we jump in with the SAS? More options. Share via, share now. No, I didn't do it right. No. Okay, just hang on a second.
Share more options. Share to a page.
It's like we're all doing our homework first.
I know.
Before the teacher gets in.
Okay,
What did you get on question 3? I got C.
Okay, forget it. I just won't share it to my page today.
Monroe Doctrine. The answer is Monroe Doctrine.
There's this thing called Chegg that the kids use now. So like, it's like, okay, remember when we were in college and you had test banks? Like people would say, oh, I took that class last semester. I'll happily donate to the test bank or the text file. There's this thing called Chegg now, and all of that's online. And like, I don't know what I think about it, but that's not what we're talking about today. It is Tog Me Off the Ledger with Jacob, Beth, and Amy. Jacob is in Ohio. Beth is in Michigan. I'm in Texas, and we're here to talk about shutting the front door. No, closing the prior month. That's the theme for today's show. Why do you want to close the prior month from an accounting perspective? Give me your 2 cents, Jacob Schrader.
To make sure all your expenses and income are recorded and you have good numbers to be able to plan off of.
All right, Beth,
Okay.
why do you want? Oh no, you just had 1 sentence.
Yeah. That's what I said. That's a quick answer.
Oh, that's a quick answer. Beth, why do you want to close the prior month?
Well, because I'm going to have a conversation with my clients about where they are against budget prior year and whatever KPIs we've talked about. To me, like I look at the, oh, is it 1 sentence? Do you want me to stop?
No,
Oh,
please,
that's all I have.
please, no, please march forward.
So I'm always thinking in pictures, right? Always, I don't know why I'm looking down on you. I should be talking here, but Amy in my world is there. I can see her cute picture. Jacob is up here. It's just how the stack is going today. So the year, it's like a slalom course, right? Ski season just opened. Please ski at Crystal Mountain Resort, Northern Michigan. That's where my husband works. So
It's up here. Wait,
yes,
it's up which way?
north of Toronto, even, if you can believe it. Hi, Tiffany. So during your year, it's like running a slalom course. There are these gates like you want to get to. And to me, in my mind, each month is a gate. So if you've got, we're in a seasonal business, certain targets you need to hit every month. If you don't close, clean the books and look at the numbers and measure against prior year budget or KPIs, you're not going to know if you're on target or not. You can't just.
I like it. So it's proactive use of your numbers is why you want to close the books.
Creating understanding.
There we go. Okay.
What
So,
about you, Amy?
well, at a minimum, you're closing the books for compliance. At a minimum, basic package. And that is so for when it's time to turn the books over to people like Jacob to prepare your tax return. It's not February of 2021 and you're going, what did I spend $4,925 on back in March of 2020? I mean, at a minimum, right? So at a minimum, compliance. At the maximum, using your numbers to run your business, because the numbers tell the story of the business.
And I think Beth mentioned something important that we skim over, and that's making sure your books are clean. So, because if the books aren't clean, which is a lot of the close process, does everything tie out? Does it actually match what third parties say it is, right? So does it actually match and are they clean? Because unless they're clean, really your numbers aren't telling us anything. If you just go run a P&L in QuickBooks and you have no idea if the books are clean or not, can that really be relied upon? Probably not, and yes, some people use it, but if you're making important management decisions, do you want to be making those off of a set of books that aren't necessarily accurate? No, because we're very likely to make the wrong decisions with wrong data. So I think a very important piece of this close process is just making sure you have clean numbers that are actionable so you can use them to grow your business.
Yeah, and real numbers too. I mean, I can't tell you how many times we have found fraud before our clients did because we keep the books current and, you know, duplicate charges, lots of gas station charges or non-business charges are showing up on the credit cards. Just like with your personal debit card, just keep an eye on things. We recommend if a company is keeping their own books, every Monday, open up your books, I mean, if you're using something like QuickBooks Online, which that's what we use, post those transactions from the bank feeds, make sure that they're all legitimate charges and know what your cash, by doing that, you can know how much cash you have to spend and then be able to forecast your cash needs for the week to make sure you've got it covered.
So what are your components of your month-end close? Like, because you have Trello cards. Amy uses Trello. We use Asana at MoneyFit. Jacob, do you guys have a word?
ClickUp. We use ClickUp. ClickUp.
ClickUp. Oh, okay. All similar processes.
Yeah.
So when you have month-end close, like actions or tasks, what are they for you guys? What's on your list?
I mean, we start with the balance sheet. So we always start with a balance sheet, and kind of going back to our episode on why the balance sheet's important. You know, we know if we have a good beginning balance sheet and a good ending balance sheet, the offset is the profit and loss, right? And we may have categorization things over there, but we start in after everything's, categorized for the month. We start in on the balance sheet. And the first one of those is reconciling your bank statements, reconciling your credit card, right? That's the first steps in the balance sheet process. It's a simple reconciliation and saying, has everything we spent and everything we received been recorded in our bank account or not, right? So is everything there and does it tie out? Is there any duplicate transactions that shouldn't have been there? Is the bank account clean and is it where it needs to be? And does it tie to what the bank says we have? And can we reconcile any differences that are there, right? Because you may have outstanding payments where there is a difference, and that is what that reconciliation process is. So we always start with the balance sheet and starting with the bank and credit cards, because those are the easiest places to start, right?
Right.
And then you move into things like reviewing your accounts receivable aging report. Do I have anything outstanding? Is inventory right? Where's the inventory report? Does it tie on to what fixed assets do we own? Did we buy anything new? Are we depreciating them? Who do we owe? Does that aging look right? Are we missing things there? I mean, this expounds depending on the complexity of the company and let's reconcile the loans. Was the interest and principal broken out correctly on the payment, right? Something that we see missed a lot is, the payment came out of the bank, you got charged to the loan. Well, what's the interest portion of that? So tying all those out into, and your more advanced ones, you're getting into a lot of, do we have unearned revenue? Do we have prepaid expenses? Do we have to need to accrue expenses that we haven't received yet? So we always start there. And then we move to the profit and loss side and start looking there of what could be missing there. Start tying things out. Like if you have a point of sale system, do sales in the point of sale system match sales in the profit and loss, right? So we always start with the balance sheet though. And that's really where we dive in for our month close process. We typically, we want to be checking every account there as we go through. And, it depends on the level of engagement we have with that client, right? On how in depth we go every month. Sometimes we have a lighter month close and we do a hard close on a quarterly basis, or some of our really low level packages, it's like more maintained. We do some basic close and then we do a hard close on a yearly basis only, so it all depends on how tight we're getting, but we definitely do those. And when we do a hard close, we literally go through every single bank account. I mean, every single GL account on the balance sheet and say, can we support the number that's there?
I love that you just asked that. Okay, first of all, this girl does not like basic clothes. I always like clothes, but I don't think that's what we're talking about. Hey, so I'm a bookkeeper. You guys are both CPAs. I want to ask because I never went through like Price Waterhouse or Ernst & Young. Does that still exist? Am I too old?
No,
they're
they're called EY now.
Oh,
EY and PwC,
Yeah.
right?
And
Like,
PwC.
Oh, sorry. I actually tried to find Christian Dior and people are like, it's just Dior. I was like, oh, okay. Everyone's sharing Adele now, I suppose. Like just the name. So, or it's all texting, like just the letters. Is that why PY?
Yeah.
or
EY.
Yes.
When you're closing at the end of the month, what backup, like the idea of work papers, saving the work papers and documenting the transactions and the close. Let's talk about, now there's like overkill, which I get. What's like good? What's good? Like good quality, not like, because we've got to work fast. So like crazy hours, like what's good during a month end close? The bank statement itself, I get it. So
Yeah.
saving a PDF of the reconciliation, or because it's already in QuickBooks, that's stupid.
Yeah, I don't save those. I would go, yeah, because they're in QuickBooks.
Yeah. So on a yearly basis, from a tax perspective, a lot of times I will save those in our tax file to prove that we've tied those out, right? Like, okay, we want the bank statement and that, so we have proof. It also depends on what kind of financial statements you're issuing, right? I think if you are truly issuing a financial that you know is going to be used by a lot of parties, you may want to grab that reconciliation report because it could be changed in the future, right? It might not always be permanent in QuickBooks. I mean, I think all of us know how to go change a reconciliation report, right? And we know how to make that happen. So if there's those risks in the future, sometimes we take some additional steps to ensure that that's saved outside of. And that's where I go, like if we're doing a really hard close, like a real hard close, then we do go, like, I want supporting documentation for every single GL account. Most of our clients, we don't do that hard of a close for, simply because we're not engaged to that level to do those things, right? You know, if like I have a client that goes through a full audit every year. Well, guess what? We do a hard close first because we pull all those documents and then we hand them to the auditor. And
Yeah.
the auditor has the easiest job in the world, I think, because we do almost all of it, right? But that's where it depends on how hard that close is. But I think a minimum, you need your bank statements, right? Like for sure. If you have inventory, you're doing an inventory adjustment, you probably should have an inventory report, right?
So where do you put them? Because people are going to watch their bookkeeper. So like, do you put it in a Google Drive? Do you attach it to the transaction? What's the easiest way to put it like in a great place? So when you're doing the year-end handoff, like I'm kind of thinking about creating the Asana workflow. Like if you had a bookkeeper work for you, a good year-end close is bup.
So we create a folder and we bring a trial balance into there as like record. And then we bring the supporting documentation for like each set of things. That way, because then we have clients that we don't do the taxes for as well, that we hand off to other people. So we create a nice bundle thing that's like, here's the bank account stuff, here's AR aging, right? Here's the inventory report, here's the fixed assets we bought for the year, you know, with the subledger there and proof. And then we can just bundle that up as a zip file and send it right over to the tax accountant. And they have everything they need to complete that, right? So we do tie it out pretty heavily.
I've also yet to be through an audit on, so Jacob and I have audit backgrounds, so we know what auditors look for. And when we first started using QuickBooks Online, I thought, oh, we'll just give them access to QuickBooks Online and they'll click on the receipt and see it, and we'll give them access charge. They don't want it like that. They want it to be uploaded through their portal. So receipts for as many transactions as possible, a receipt attached to that transaction. And that's more for internal use. But then also when you get your test list from your auditors, you can easily pull that up, download it, put it in a folder. I am a big fan of the roll forward schedule, which is what you were referring to as a work paper, Beth. I think you could, that's a roll forward as part of that work paper.
What's that?
I want to have,
I don't know what that means.
So a roll forward is pretty specific to balance sheet accounts. And so for every major balance sheet account that I want to verify each month, like Jacob was talking about, inventory, especially like an accrued expense or a prepaid expense. Let's take prepaid expense. I have a folder for prepaid expense with my master roll forward schedule. It takes the beginning balance that should tie out to the prior month, any additions, any recognitions, and then we have the new balance.
And this is an Excel spreadsheet?
Yeah, ours is Google Sheets because we're a completely remote team.
Right,
so yeah, same concept though. And then any supporting docs will go in that folder as well. So within a client folder, there's a folder between major topics, accrued expenses, inventory, and then all the stuff is in there.
Yeah, so like we have a prepaid expense one that, you know, every time we prepay something, we put it in there. And then we recognize it, we take it off that schedule, and it should always tie, right? And you can list it out in there. So that way, it's basically a subledger outside of there that truly makes that up, that avoids all the little transactions that always happen, right? Like, so it's not just a GL report, it's a very condensed, here's what's actually making up the balance that's sitting there.
Yeah.
So I have more
So
questions
Beth-
for you guys. Can I just?
Oh, I
share
was going to ask.
quickly?
I
Go
was
ahead.
going to ask you a quick question from your bookkeeping's perspective. So what you've got different levels in your company. You've got lead accountants, you've got people that review. What do you expect the frontline bookkeepers to do versus the person that's reviewing before it's finally closed up? Like if I'm a brand new bookkeeper and I'm working for you, you're my lead, what would you expect me to do?
We have in an Asana task for month-end close, tasks assigned to the account coordinator and tasks assigned to the account manager. So we also really believe in extreme ownership, right? So it's a great book, read it when you can. But the account coordinator is responsible for good documentation of the receipts and bills and all the documents that come in the front end of the transactions, because we push the paper, right? So the allocations have to be strong, right? That what I mean by that is they've got to go through the transaction list by vendor report to make sure that every time AT&T bill comes in, it doesn't sometimes go to utilities and sometimes goes to internet expense, sometimes go to telephone. They've got to make sure that they go back to the client and ask clarification questions for anything that was booked to ask my accountant. They have to review their reconciliation reports to make sure, we call it grit, that there's no grit in the report. That means that if there's anything that's listed as an uncleared transaction, it either was right at the end of the month and didn't have a chance to clear, or we've already gotten word from the client that that should stay outstanding for a particular reason. They save the reconciliation reports, not so much because I need them, but because then I know for sure they looked at them, and we save them to a handoff folder to go to the account manager. Then the account manager has to go through the higher level reconciliations and look at, maybe we call them the bridge transactions, the journal entries from the POS or e-commerce system into QuickBooks, checking the payroll allocation if there are splits that are required, especially in not-for-profits. So that's a higher level responsibility of the account manager. The account manager then has to print the full financial statements and review them. Like to me, it's like you get a wider view. And then as the account manager closes, in our case, we're all females, so she will create a report for me to review. We call that the second eye review when I get it. And then I have access to everything from the reconciliation report up through the notes that come to the account manager that shows that she's reviewed the entire file, and anything weird like a large, like cash in transit. If that's a big number, I would expect an explanation as to why. That's how we've tiered the responsibility. Then I, at second level review, either email the statements to the client or do a CFO review if that's the level of service. That's how it's broken up.
So it sounds like we've all got similar processes. We're calling them different things internally, but the controls are in place to most likely catch something before it goes to the client. That last step that we do that you're talking, your second eye review, we do what we call a flux analysis, which that's straight from an audit background. You know, that's one of the things an auditor will ask you to do. And it really, you don't think things are going to fall out, but after you've combed the book, scrubbed the GL, things will fall out in that flux analysis. So that is a nice way to end it. Okay, so I know we can jabber on forever and we're supposed to stay to 15 minutes. After you've cleared up any questions with the client, the financial statements have been issued, what is the one last thing to do on a hard close, especially in your accounting software?
Lock the books.
Lock the books. Do you put a password on it?
We do on most of our clients, yeah.
Okay,
Yeah,
so there's a mess on that though, which I was going to ask you about. First of all, I think we all should get paid every time I sip out of this mug. If you've got accounting software that's syncing transactions in, like Receipt Bank, if someone gives you a receipt let's say, or no, maybe that's a bad example because that's a transaction that already occurred. Let's say you've got a document management system where an invoice comes in that's dated inside, because bookkeepers don't necessarily not know to do this, but have a process to handle this, has a date inside of the date range that you've already closed and pushes it in. So
It
if,
actually, it should not be able, it would not be able to push it in. It would error on the thing.
right, that's the thing. So you're not going to know it, but it's actually exploding inside of your sink and you won't see it because you'll get sink errors inside. The bill will never make it. So
Yep.
what you have to think about internally in your process is you're going to have to, if you're doing hard closes, push forward the invoice date into an open date range.
Which is,
Yep.
and that's what should be happening because we've closed that period. We've locked it from that standpoint. So we're going to date it the earliest we can date it. And we'll have to adjust the due date accordingly because it's not net 15 from the date we put it in our system. And that's the difference between a hard close and a soft close, right? In the soft close, you can, many times you'll still allow posting back and you'll make those posts. But in a hard close, you should not be doing anything additional, before then. And hard closes become really important if you've issued financials. If you know a financials went to a bank, you better not be changing it after, after the fact, or you shouldn't be. Different things like that. So I think it's important to understand how you're closing and the reasoning for why you're closing the way you're closing, right?
And it can vary by client. We have many clients that it's a semi, it's somewhere between a hard and a soft close.
Depends on how big it is. Like,
Yeah,
there's
yeah.
materiality levels, right? Like if you get $100,000 bill,
Yeah.
If you get $100,000 bill 2 days after your hard close, that's dated in the prior period, you're probably going to be like, we should probably open that back up.
So, but my advice to accountants and bookkeepers at year end is anytime after January 31st, I would, every time somebody asked me to make a change in the prior year, I would be checking with whoever is the decision maker. Have the books been closed and handed to the tax accountant? And we sometimes ask that question well into the summer if they filed an extension. Can I still make a prior year adjustment? So put in your mind as the person keeping the books, when you're hitting late January, early February, ask. If you don't know, ask. Yeah. Jacob says, please.
or have a relationship with a CPA. I mean, bookkeepers and CPAs, I think, should work together. I mean, I just got an email this morning from a CPA saying, I'm going to meet with the client to do some personal tax management. I want to let you know that we're meeting because we're probably already also going to talk the business. And I had some things to tell him, like we just got in the PPP forgiveness letter this morning. So I wanted him to know that before he got into the meeting. And if you can reach out to the CPA directly, I think that's a great way to go.
And I think if you're a small business owner that's trying to manage your business, this should be important to you as well, because you really need to do these month-end closes or have somebody helping you with these, because otherwise you're making decisions based upon data that probably is not accurate. And I'm just going to say, there are very few times I get a file that doesn't have a month-end close process that is truly accurate, right? So how much is off will depend upon your business and things like that, but be aware of this as you try to use your financials to grow your business and actively make this management decisions in there. I think that's super important.
And it forces a lot of operational fixes when you realize how far behind you are on uploading your bills, paying your bills, getting your invoices in. Sorry, I could go forever on this topic, but
yeah, for sure. And we're heading into that season that the phone's gonna start ringing for people that have not done a close and are playing catch up in the beginning of the year. So try not to be one of those companies if you can. All right, any last words before we close up for the week?
Are we going to be here next week? Or are we going to take vacation?
I think we do one more.
Okay, then I won't wish you Merry Christmas yet.
Okay, we'll do that next week. Find us on the socials at Beth.
BeMoneyFit.com.
And Jacob.
AscendLLC.com.
All right, WalkerAgency.us. Wave the flag. Y'all have a great week.